we were thinking a lot about climate, thinking that it was a much bigger issue. We saw very little was going into kind of climate related innovation for the industry. And as we really started looking at where the money was going, it was like better models to help the industry exit faster in our mind, which was, prudent because of the economics of providing insurance on the catastrophe side. But we didn't necessarily think it was great for the world. We kind of came up with this lens of what does the world need from insurance first. Hi, I'm Charlie Sidoti, Executive Director of InnSure, and this is the future of insurance.
Charlie, it's great to have you on the show. It's an exciting moment for you and for InnSure, so we're going to get into that. But first of all, thank you for being here. And if you don't mind, give us a little background on you, and we'll talk about InnSure as well.
Sure. Thank you very much. Great to be here. Just quickly, my background, I spent 20 years with large P&C carriers, all on the commercial side. And then I spent about 10 years working on insurance adjacent analytic startups before founding InnSure. And we can get into what InnSure is, but we're a nonprofit innovation hub focused on innovating insurance, everything related to climate change. And first, through the lens of what does the world need from insurance, which we also think is really good business for the sector.
I did want to ask, you said the word innovation a couple of times. When I first saw the name, I was like, why are there two N's in insurance? But that's not it. It's playing off the word innovation in that respect, right? Not a misspelling of insurance or anything.
Exactly. We didn't just kind of misspell and go with it because the logo said that. It is, we think we are focused on innovation, and as a nonprofit kind of separate group, we want to provide both the sector and then people outside the sector, a safe place to test and learn. So that's the sure part, and the in part is innovation, but together it's all related to insurance. So that's the background of it. And thank you for asking, because we do get that question a lot. So getting it out there is super helpful. Thank you.
You're putting the innovation in the insurance industry. How's that?
Yes.
All
And
right.
we've had some people say, we've had some legal people say, at carriers, we put the no in innovation. And so we're trying to take the no out, I guess, is
Okay.
what the way we think about it.
Okay. I think that's the right path. Less no,
Yeah.
more pushing ahead.
Yes,
Um,
yes.
but it does have a climate focus in particular. And before we get into that, I'm just curious. You said analytics and you have a bit of an underwriting background, right? So were you in the like climate exposed or cat exposed area, or has this just been a personal interest and mission for you?
I mean, I'll give you the journey a little bit. So I started as an ocean marine underwriter, and I was almost immediately, I don't even think I underwrote an individual account. I was going through training, and I was recruited by some large property people that started at St. Paul companies. And I went into the large property group. I have an engineering background, not a like actuarial background.
Okay.
But then I started getting into the actuarial pieces. And when we originally launched InnSure, we were focused more broadly on InsurTech
Hmm.
and, things that a lot of other people doing. And it was literally like 3 months before the pandemic, and the pandemic hit, and we kind of had a identity crisis a little bit. Like, how are we any different than anybody? And we did a little bit of analysis around like where money was going related to innovation. And as a nonprofit, we were thinking a lot about climate, thinking that it was a much bigger issue. And we saw very little was going into kind of climate related innovation for the industry. It was all how to reach the customer
Yeah.
and things like that. And so we identified it as an opportunity. And as we really started looking at where the money was going, it was like better models to help the industry exit faster in our mind, which was, prudent because of the 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 economics of providing insurance on the catastrophe side. But we didn't necessarily think it was great for the world.
Yeah.
And so we kind of came up with this lens of, what does the world need from insurance first? And then, and just in terms of a personal journey, I have kids that are at that time they were in their college years, and they were like, the industry should do something. So they were pushing
Yeah.
me too, just personally, like, yeah, you should focus on this.
Yeah.
So
Well,
it's become a passion for sure.
I love that notion of if the things we were doing were really just to exit faster ultimately, whether we realize it or not, that's a strategy. But what you find is you've effectively run out of markets to compete in, and then your business doesn't exist anymore. So instead, to find a path that makes those businesses viable to stay in rather than just ways to retrench.
Yeah. It's a real legitimate question that I think people come down on both sides. Like, what
Yeah.
is the role of insurance? And, there's a legitimate kind of economic argument that maybe it's like pet insurance, and which is great. It's growing fast. It's a great market for the industry. But insurance is more than just a business, we think. The world needs a strong, relevant insurance industry that is leaning into the most difficult risks. And I think, long term, if you really avoid those risks, it's not good for the industry. It's become irrelevant with customers,
Yeah.
but also regulators at some point are going to be like, hey, if the government needs to do all the hard stuff, we might as well do the easy stuff too.
Yeah. Yeah. Um, so there is this challenge, this prize that you guys are administering for NYSERDA for the state of New York. But this is the only thing that Insure does. So I want to get into that, but frame up a little bit of what are some of the things that the organization is doing to help kind of catalyze that change in the industry. And then I definitely want to talk about the prize.
Yeah. So we have a number of things. The Innovation Prize, which we could talk about. Part of the Innovation Prize, NYSERDA has been supporting what we call CRIS, which is Climate Risk and Insurance Sandbox. We can talk about that a little bit as well. We also have what we call it's really, we call it our community embedded insurance initiative, but it's more than just, it's really focusing on the catastrophe issues related to climate, but from the community side. Like, what can the communities do to shape their insurability landscape?
Yeah.
And so that's kind of the framing of how we think about catastrophe insurance. And there's a number of things we're doing there. We also think a lot of these challenges are going to be solved by the next generation of leaders. So we recently launched what we call InSure Corps, like Peace Corps. So it is a professional development group that is multifunctional, people from the industry across all functions in the industry, but also people from communities and people from the adaptation space to try to think about the role of insurance. And a lot of these people are very passionate,
Yeah.
and they are kind of lower, lower kind of level new people to the industry, and they can't really kind of affect change completely at their companies. So this is a way to engage, learn what others are doing, create conversations across traditional boundaries.
Yeah.
And then we've also been part of the GGRF, the EPA grant that kind of went to primarily was focused on the green banks, but the Coalition for Green Capital did include some language about creating a Greenie Re, emission-driven reinsurer that focuses on some of the same things the prize is doing, and they got a $5 billion grant. So we're excited about that. We've been working with some other insurance industry participants to support the notion of uh, insurance being part of the financing solution for de-risking some of these technologies on the energy transition side.
I do. It is really striking me that being a nonprofit almost feels like a necessity in this case because it allows you the space and the freedom to actually tackle what is I mean, you're saying it's a multi-generational issue. It's like building the current pool of talent to become the leaders who will affect a lot of these longer term changes. And it's pretty hard for a commercial enterprise to
It,
do that.
we kind of thought that when we were setting it up, and I was the one pushing that. A lot of people, including people on our board, were like, "Why are we doing this as a nonprofit? Like, what is the rationale?" but it has become increasingly clear that what you just said is really true and evident. It allows us to have very different conversations
Yeah.
with a lot of different stakeholders, including like family offices, but also departments of insurance. They can talk to us in different ways that they can talk to people that are pushing out, commercial products, even though we're trying to like catalyze new commercial products. It's just a different conversation and a different role,
Yeah.
which has really been just an interesting personal journey for me because I like that's one of the things we're trying to really get up to speed on is like how do you run a nonprofit? How is a nonprofit different? And it's one of the more fun things too, quite
Yeah.
frankly.
Yeah. I've been on the same journey, so I hear you.
Oh yeah,
Uh,
that's right. I
yeah.
forgot all about that. Yeah.
And it is different, and it does obviously like there are things that you give up in that process, but there's a lot that it affords you, and so recognizing that and taking advantage of it, and it does sound like you're doing that. I do want to get into the innovation prize and understanding that because it's quite timely, but tell us more about like what is that? What kinds of companies or ideas is that targeted at, and what's the intention? It's not just to give away money, it's trying to affect change. So and I'm also curious, it's out of New York, you're not. So it's always nice to see, Yankees fans supporting
Yeah.
Red Sox fans. But what
Where's my hat? Where's my
yeah,
hat? I don't know.
we'll Photoshop it in.
Yeah.
Um, but what is it's not like, is it a New York thing, or is this New York recognizing there's a bigger question and we want to be at the forefront of that? Like tell us all about this.
Yeah, so and feel free to fire questions as I get into it. But so NYSERDA is the New York State Energy Research Development Agency. They part of their budget comes from fees from the ratepayers on the utilities.
Yeah.
They invest about $1 billion a year into new energy transition technology across a number of different things, solar and wind and large scale battery storage. And, you can imagine New York City has a huge, how do we decarbonize all the built environment here?
Yeah.
Energy, clean transportation. And kudos to them because there's nothing really in their mandate that says insurance per se. But as they've been investing for decades, really, and really focused on the decarbonization of the state of New York, they realize that their capital is being used to uh, prove out technology that then came to market. But then when it comes to market, there is this kind of valley of death that it needs to transition away from the both grant and kind of early stage VC money, and needs to be bankable from, loans and things like that. But there's all sorts of risks associated with this early stage technology
Yeah.
commercialization, not even after you prove out that the technology works. And so that's where they've been working a lot with the financiers and the green banks, but there's still unique capabilities that the insurance industry has to identify, analyze, and transfer some of these risks. And so, the whole world is kind of aware of the protection gap related to catastrophe insurance. Innovation is going 100 miles an hour in this technology space related to the energy transition, and even faster now with all the federal government money coming out. But insurance innovation is not really keeping pace because the insurance industry doesn't invest that much in R&D or
Yeah.
innovation, and it's also the industry, except for a few companies, is mostly actuarial, kind of backwards looking driven, and new technology is really hard to do. So they said, like, we have a problem, like we want to protect our investments in this technology. How can insurance products de-risk it? And so they created this challenge, which essentially it's a $5 million pool of grants that will go to 5 to maybe 10 winners that create in-market insurance products that will accelerate the adoption of technology in those three buckets I talked about. So clean energy, clean transportation, clean buildings. and it does have to be New York focused, but they are really looking for kind of New York, but then nationally relevant as well.
Yeah.
And so, and I think there's a wide range. We just opened it last week. We've been getting pummeled with calls about, the eligibility criteria is out there. But the core thing is it does need to be, because it is funded by the ratepayers of New York. The insurance product has to tie to the technology and be relevant to the ratepayers of New York, which is, hopefully either unlocking financing for some of these projects or de-risking them in other ways, making it easier for these technologies to come to market.
Sure.
So
So
that's the high level, and I can dig
yeah.
in even deeper if you want.
Well, so it's not that it can't be applied to other places, but if your solution is for like the Great Barrier Reef, that wouldn't make any sense. But if it has a New York application but could also be used elsewhere, that's fine.
Yeah, it has to, yeah, exactly right. And it has to be to those kind of technology buckets. So it's not just decarbonizing or like carbon credits related to things like nature-based solutions. So it very much has to like decarbonize the grid, decarbonize buildings, decarbonize transportation, starting in the state of New York.
Yeah.
Within those buckets, there's a pretty big
There's
range
a
of
lot.
technologies, and there's a lot of ways that we've spent the last year and a half kind of looking at how insurance could help, and then like people are still coming to us with ideas we didn't even think of. So it's super exciting. There's a lot of opportunity to move the needle on the New York State climate plan and the national kind of decarbonization efforts. But also we think that this space is very much like life sciences was 30 years ago,
Hmm.
cyber was 30, 40, 50 years ago, that there's not a big market there, but there's a potentially really huge market.
Yeah.
McKinsey says it's like a $15 billion market just for the technology. But if you also think about all the things I said, there's like a $300 billion home, built environment insurance
Yeah.
market and transportation market. These efforts are dramatically changing the risk profile of those existing markets.
Yeah.
So even companies that aren't thinking about like how do we grow, that are just like want to maintain their market share, need to be thinking about how the energy transition will affect their existing portfolio of business.
Yeah. I do. I mean, it really does feel like it gets right back to the thing that got you into this in the first place is not just how do we protect insurance from the effects of climate change, is how do we use insurance to help everyone through not just climate change, but moving us in the right direction instead of the wrong direction.
Absolutely. I think I mean, just from we started InnSure, I gave you a little bit of the background. Like winning the grant has been hugely kind of door opening for us. And we think we got it because we really started when we decided to say focus on climate, we just started interviewing everybody inside the industry and outside the industry about what that role is. And like we came across, and it was before the RFP even, it was this RFI from NYSERDA asking about like what are the problems, what are the challenges. So we kind of went into it with a pretty good thesis of what we thought, and it's not a lot of rocket science, but it's a lot of execution, which the industry is like needs to do, especially on this topic.
Yeah.
And it's kind of bringing together a lot of different things, and quickly, like in like the amount of capital going into innovation in the clean tech space is ginormous. It's like really big.
Yeah.
And things like large scale battery storage, there's like permitting issues that can delay things that cost risk. These are some things that can be insured. And it's really kind of it's super exciting to sit in a room with a bunch of people who want to finance these projects people who need money to deliver these projects, but then they're thinking about like the New York City Fire Department permitting process that is worried about, risks that are really the domain
Yeah.
of the insurance industry to identify, analyze, understand, and either mitigate and or transfer. And when I talk in on at conferences and things, I always talk about the insurance role 100 years ago when electricity came in, and they flipped the switch at the World's Fair, and the insurance industry was there and said, "Oh my God, this is going to burn down buildings and electrocute people." And at the time, it was an engineering driven, and I'm biased because I'm an engineering background, but it was an engineering driven industry. And they said, we need to make this safe and insurable to maintain our market.
Yeah.
And they created underwriter laboratories, and they did just that. And I feel like the shift away from engineering, and then this is a broad statement, it's not all companies, some companies have deep engineering, but the actuarial approach and the kind of lawyer approach is like, we need to exclude this and we need to raise rates, which it's important to protect the balance sheet. We want these insurers to be economically solvent. They have to be. But I think you can get there different ways, and relying on pricing and exiting is not the best way for the world. And
Yeah.
so what we're trying to do is catalyze a little bit of return to the historic role of the industry.
You're speaking to my heart, and anyone who's been watching the show is like, oh no, Charlie's getting on Brian's soapbox right now.
Oh,
You
nice.
can't just jack up rates and pull out of things. You have to figure out a way to make it viable.
It's hard. It's really hard. So I
It's
get
definitely
it.
hard.
Like, it's like easy to just say, and if everybody does it, it's like, well, it's really not a competitive disadvantage if
Yeah.
everybody does it. But long term, it's not sustainable. It's just
That's
not.
the point. Like short term, I get it. You had a rough quarter. You need to do something like fine, but that can't be the end of the discussion. And that's where I want to turn to with you is kind of taking that longer term view. Where do you think things are headed? Because we are in a moment that feels kind of impossible, where carriers are like, look, if we sell this at a rate we can afford to sell it at, you can't afford to buy it. And buyers are like, well, if you would just sell it at a rate I could afford to pay, I get that you're going to lose money, but so it's almost like the market can't clear right now, and that's a very stuck position. So looking ahead, especially for someone who's thinking about kind of the macro factors that are making these problems real, and trying to solve for we just need to find a way to do less of it and charge more. Where do you see things headed?
I I I I mean, it's a great question. There's so many kind of pathways I can go down. So let me just kind of go down a few. One, I do think the industry is these climate issues. They've always been talking about them. We've always been talking about, but they are getting very real on both
Yeah,
sides, the energy transition side and the catastrophe side, which is like, everybody's talking about, like, more so than in my whole life. People, like I said, at cocktail parties are like interested to talk to me that don't know anything about insurance all of a sudden, first
yeah,
time in my life. I think innovation is, you can't just rely on those two levers, price and exit. So people are starting to really think about, like, well, how can you innovate? And you see a lot about the predict and prevent, which is great because you do need to bend the cost curve on some of these things. And I hope, and I think, and we're trying to push it, that it can evolve also to like reimagining how things are delivered. And because there's a lot of things you can do you're seeing a lot about parametric products, micro insurance. These are all new things. You can evolve the business model to transfer in different ways. Um, we have, when we started, we were super focused on the insurance industry, like working with the industry, and we still are focused on that. But the people with the pain, whether it's the developers of these projects, the funders of these projects who have like 30, 20, 30 year time horizons, unlike 1 year policies. They are very interested in how insurance is responding. And then also at the, like on the catastrophe side, the communities have always just assumed that insurability is there and insurance can be had, and it's not something they need to worry about. We think like those stakeholders that really have the pain will start to drive insurance in the industry.
Yeah.
And they will use things like group purchase of, community embedded insurances, like
Yeah.
if we purchase the catastrophe for everybody in the community, we have more leverage to drive what the products and services are. And so they're going to learn how to do these things because they feel the pain. And then the dialogue gets different with the industry, especially the ones that kind of recognize that long-term threat that we talked about earlier, that, the threat isn't, there's some threat of like being insolvent if you don't do the math right, but the real threat is being irrelevant. And irrelevance has always, like, I think McKinsey's been talking about it for a while, but it's always been like, the industry can't be irrelevant. But now it's like, oh my God, we really could. 50% of catastrophe losses are not insured.
Yeah. And it's growing.
And it's growing. Yeah.
Yeah.
And it's like, it's just unsustainable to be an industry if you're not doing half of the losses, and the pain is landing on the regulators, the states,
Yeah.
the same people who are regulating you. It's just unsustainable.
Yeah. I'm going to be very curious to see that percentage after last year, because those numbers are always lagging, and we had such a shift in like reinsurance attachment points, self-insured retentions, deductibles, massive shift. And hail is a cat, there's so many carriers like hitting all their cat thresholds without a single name storm. So that the nature of what gets us into that stratosphere is moving dramatically.
Well, one of the things we've been promoting as a concept on the, like when we talk to communities, because people ask us like, what should we do? Like, what should we do? What should we be worried about? Like at the community level, and that could be like local, federal, state, all sorts of kind of people who are kind of looking at their problem. And we say, one, you should be worried about that. You're asking me what you should be worried about, because if you're at an insurance carrier, and I worked at large carriers and this was like, there's like pre-Andrew and post-Andrew.
Yes.
After Andrew, what you saw was when a hurricane was coming up, the numbers would be like, hey, this is how we're going to be hit at a company level. This is how every division's going to be hit. These are the numbers, and the PML, the MFL, the average annual loss is going to be whatever. And so that was the filter that has become the mindset of decision making at carriers. And they're saying this to the public and saying like, we can't lose money, like we're trying to run a business. And what we're trying to say is like that modeling perspective needs to be flipped. And we think that the uninsured, like average annual loss, or the uninsured PML is the lens through which community leaders should make decisions about. And you can use the same number to say, which infrastructure do we do?
Yeah.
How do we change land use policy? How do we think about community purchase of insurance at a group level? And it should either bend the cost curve, like, okay, we actually reduce losses, so that's good for everybody. It protects our tax base, or it transferred it. And then you can look at like what investment did it require to transfer it versus invest in mitigation, adaptation to bend the cost curve. And so it's a fairly simple lens that we think community leaders, if they just get up to speed on a few numbers, which is what the executives at these insurance companies did after Hurricane Andrew. And it provides a way that they can kind of take control of their insurability landscape without just saying like, give us the, whatever, like just saying regulate the industry to
Yeah.
provide insurance. So I think it provides a more functional thing. And the other thing it also does is the whole modeling world in insurance is really effective at capturing broad-based changes. Like I read that I think 60% increase in rain in the Northeast over the last few decades. So those get captured in the models, but when you say like, oh, South Boston or East Boston did a small kind of narrowly focused, uh, uh, whether it's a nature-based kind of, restoration, conservation project or infrastructure, a lot of the infrastructure doesn't necessarily have dramatic changes on flood zones, but it's more subtle. And
Yeah.
those things aren't easily captured. But if the community kind of, which is deeply invested in those projects, understands the relationship to PMLs, MFLs, average annual losses, they can push it back to the industry and the modeling companies to say, this is exactly what you should capture and why. And some of the effects are at a community basis, not necessarily an individual asset
Right.
basis.
Yeah.
So they can say, and we're going to kind of purchase insurance as a group so you can capture it, even though you don't know what it affects this building versus that building.
Right.
It's super, it's not rocket science, but when you start taking all these little innovations like parametric with micro insurance with different capital stacks, and you start putting them together, it really reimagines how insurance is
Yeah.
delivered.
Yeah. Well, so A, you're speaking to my heart, and B, I like the fact that these are ideas and these are interesting things, and you put together the mechanisms to help catalyze it. So it's
We're
not just
trying
like, hey,
hard,
what if
and
we
we're
did
looking
this?
for people to help us. This is
Yeah.
great. Yeah.
No, it's fantastic. So I think it's a great note to end on, that people hear the things we should be working on and mechanisms to actually work on them. So I really appreciate you coming today, Charlie.
Thank you so much. We really appreciate it. And to your audience, like if anything resonated and you want to reach out. We'd love to talk to anybody who's mission aligned.
One,
Thank you.
I will link to InnSure in the show notes, but also the prize, the competition is still open through, I think, July 22nd.
Yeah, so there is a LOI period. One of the things we do believe that is some people may not have all the ability to deliver an in-market insurance product that addresses these specific issues. So there's an LOI period between now and the 27th. If you give us like 3 sentences about what you're doing and maybe some skills or partners that you need to deliver it, we can try to match you with other people in our ecosystem to
Oh,
help
cool.
you at the application period. But then it is open through late, I think July 22nd.
Yeah.
All the questions are out there and the evaluation criteria, and there's all sorts of information. And we're happy to take calls as well.
Awesome. I will link to all of that in the show notes. So for people who are listening, like, do look at the show notes and click on this, because that's an easy way to get to all this. And of course, they can go to the InnSure site as well. But Charlie, thank you so much for joining us today.
Thank you so much. Appreciate it. And we'll talk soon. Take care.
Thank you to Charlie for coming on and sharing what they're doing at InnSure. And yeah, the prize, the innovation prize, is it's absolutely something that I know some of you listening are like, that is exactly what we should be going for. That definitely applies to the work that we're doing. And what a great opportunity to get support and to focus on, frankly, one of the largest economies in the world, the state of New York, and their push to decarbonize and to try to support what is a much more sustainable future for not just the environment and everyone who lives in it, but our industry as well. And so I'm really excited about this program. But I love the things that Charlie talked about. These are very real things that we actually should all be thinking about. And it helps us to move past we'll just pull back and wait, which is sort of our traditional response as an industry. We'll just wait until it cools off or until rates get to a level that we feel is acceptable. That's fine, but that's not long-term sustained health as a business. What if you could figure out how to thrive even when things are tough or when they're unpalatable for your competitors? If you can thrive then, imagine how you will perform when things are good enough for everyone else to pile in. You'll really, really thrive. you will really, really drive the market. You will be an absolute market winner and not just fine. And that's what excites me about so much of the work that InnSure is doing, and why I was really thrilled to have Charlie on the show. So thank you to Charlie and to everyone who's collaborating with and contributing to the work that InnSure is doing and catalyzing for the industry. And thank you to all of you for listening. I hope this is interesting stuff and gets your wheels turning. This is what we need. We have to keep engaging in the conversations that are challenging and tough and inspirational and insightful, and show us that despite the challenges we face as an industry, we can still do things. We can still move ahead. And I think Charlie really exemplified that with the conversation today around what InnSure is up to. So I will see you back next time. Hopefully you're fired up and excited, and let's keep pushing the industry forward. Thanks, everyone. Bye-bye.